Hello, everybody. Joshua Hayes at BigWaveTrading.com. The market ended its worst seasonal Monday through Friday period. Had it pretty much lived up to it, but still, overall, we're just consolidating. I am a little bit nervous, quote, quote, nervous. By nervous, I mean not nervous at all, but nervous for the bullish price action, I guess I should say, as we head into earnings season, which happens to be overlapped with an election. So I am cautious short term, and here are the reasons why via the facts. The SPY overall looks great. It's above, it's uptrending. Actually, let me go ahead and do this. Let me add the 21 EMA on here. Draw style, exponential, visible. There we go, close. Okay. So there's really nothing wrong here at all. SPY's above the 21 EMA, above the 50 SMA, above the 200 SMA, above the 500 EMA. Absolutely nothing wrong there. QQQ, same exact situation. Properly stacked EMA to moving averages, price above them all. Hard to be bearish. IWM, I would personally, based on what I like, and we will review this later on, like MNPR, see the white triangle? I'm still long and still have a position. See that 680% gain in a little bit over a month? We aren't going to get these. This is going to be continue to be an outlier event and not the norm until the IWM leads. But that being said, even with the SPY and QQQ leading, my focus is on big caps and mega caps. I just would personally like to see this index leading. That being said, even though price is below the 21 EMA, it's still above the 50, 200, 500 EMA. It is impossible for me to be too bearish on this market overall, but the one problem I continue to have is I don't see the DIA leading, IWM. I look at my growth indices. None of them are really leading, so the SPY is kind of the leader. But if you look at the RSP, it's a little bit weaker, excuse me, in the short term than the SPY, and the QQEW, a little bit weaker than the QQQ. So we're kind of losing breadth, kind of lines up. And here's where the concern really comes in. The TNX, that bond yield has moved up so much. And I figured following yesterday, it should have reversed. So I actually took a long position in the TMF. Hence, you can see the white triangle. And I'm already out. I'm getting out. I'm selling a quarter at the market. I'll have a quarter below this stop, a quarter below this stop. So I'll be out of 80% of it before it can run where I'm risking from and my final stop level. But I'm basically out. So if I got, now I always told you guys, if you are there for the market open, which I am not because I'm on Maui, you only get long on red to green moves. Did this gap down or gap up? Gap up. So nobody using the methodology the correct way should be long TMF. But I've let you guys know on Maui, I'm not adjusting my lifestyle to wake up at 3:30 in the morning anymore. So if it fills, it fills, and I'll just manage my stops and then moving forward, we'll reduce size. Now, I'm not actually going to reduce size because I only have one new long position, but TMF did that little reversal. I don't think it should have done that. So TNX, probably the yield looks like it wants to go higher. And when I look at the SPY during this uptrend, we dipped, rallied, and we still look good. Look at HYG, which is the high yield corporate bond. We are below the 21 EMA and 50 SMA. I'm starting to see negative divergence. So with the risk on bonds that I like to see moving in lockstep with the market, we have lost that lockstep movement. And I'm starting to see weakness in the high growth bonds, high yield bonds, I should say. So that's a red flag with that TNX rallying, which is why we don't see IWM leading, mini red flag. These are actually yellow flags overall for the market. Price is all that matters to me. So price is key. So these are minor red flags. Overall, yellow flag on the market heading into the election. Just keep that in mind. But also, when we look at the VIX, my best returns, smooth trading, not getting shaking out of names, happen when the VIX is below 15. And as you can see, not only is the VIX not in the teens, it's above 20. Well, obviously, if it's not in the teens, it's above 20. So the VIX is elevated. High yield bonds aren't confirming the recent move in the market. Treasury yields have exploded higher. Inflation looks like it's coming back. Election coming up. earnings coming up, I'm a bit concerned. So then if we look at the price action, if we look at the SPY on a daily, this indicator, I've back tested this and it's a beautiful, 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 beautiful system when it lines up. Since the beginning of January, I have not gotten the SPY to dip below the 50 SMA with the tickets indicator above 0 the entire time for a new long position. Every time the SPY has dipped below the 50, this tickets indicator has dipped below the 50 with it. And when it crosses, the tickets indicator is never above 0. So, as we've all kind of thought this year, based on the strength of the market, the 21 EMA is the new 50 SMA. So anytime I can get the SPY to dip below the 21 with the tickets indicator above 0 and reclaim, want to get long. Well, it touched the 21 EMA, would have worked here, never got below. Would have worked here, never got below. Now we're finally below. We reclaim. We're still below. Now, right here, we finally reclaim, but we're still technically below. Now we're above. You can see it's worked. But once again, even if we use the 21 EMA, I've never gotten my beautiful, beautiful signal. And I back tested this thing going back to 1950. It works. It works. It works. It works. It just hasn't set up one single time in 2024. I bring this up because on the daily pattern, you can see we're starting a little stair step down. Doesn't mean anything. And as you can see, you can stair step right back up. But remember, we're talking about short term in the market. So if I switch from which by the way, my time segment volume is red, also confirming that little short term move down. But if I get granular and go to the hour time frame, let's use 20-day and then let me change the 20 days, time frame. Let me change the 20 days to 90 days just so we can build it on out a little bit further. Okay, so actually let's get a little closer. Okay, so you can see that the SPY got below the 50, tickets indicator below 50. For that buy, you want the SPY below the 50, trading below the 50, that's uptrending with that tickets indicator above 0. We're now below the 50 with the tickets indicator below 50. We're stair stepping lower, and you can see we got price with higher lows, but the tickets indicator with lower lows. On top of that, the time segment volume on the hourly chart has flipped to bearish. So short term, we're aligned for further movement lower. Doesn't mean it will happen. Nothing is guaranteed. I told you overall I'm bullish on the market. I'm still taking signals. I just wanted to show that in the very, very short term, it's not like we have this kind of situation where the tickets indicator is trending higher, time segment volume is above the 0 line and basically green. This is an hourly, and then whenever you go to the higher time frame, it isn't confirmed with a stair stepping higher tickets indicator and a green time frame. I'm just saying right now in the short term, we're not lined up. So with earnings coming up, it's going to be very, very difficult for new long positions to trigger and me want to get long, especially since a vast majority of the names that I've been getting long recently are basically doing nothing. I'm having some winners, I'm having some losers. Overall in aggregate, they're not doing much. So with that being said, let's actually get to my one and only long position for Monday. All right, so I have one new long position for Monday. It's going to be MRX, but before we review MRX, I want to show you that I also had a few other stocks to consider. The first one was WLDN. I'm passing on WLDN because once again, it's extended from its 21 EMA, 50 SMA, and I believe it has earnings next week. So that lower volume, even with the pocket pivot point signal, with it being extended from the 21 EMA, which I just took away, kind of distracts me from these charts. I'll go ahead and put it back on for everybody. But with it being short-term extended, I'm just going to pass on it. I've wanted this stock ever since back here, and I just can't get an entry because the one time it gets to the 21 EMA, I don't get a pocket pivot point signal, and my balance of power indicators going the wrong way. So once again, it's just a market where a lot of things I just can't get quite to line up. One thing I did get to line up was ENSG. ENSG was a near grade A signal here and produced a very nice quick 18% gain. and from the near grade A signal produced a 24% gain. I got my long position before that signal, so at its highs it got 26. Kind of tried to give an add signal today, but volume is below average after earnings, and BOP really didn't surge higher. So with that intraday reversal, I'm going to go and also pass on this one. And then also ON was also a long consideration with the pocket pivot point signal. But I don't know. I think I would like to see it work on a longer base and then put a buy stop above this high and get long ON on that breakout. But I just couldn't get long ON today. And then one more thing I want to review. MNPR I discussed with members yesterday, how it was a great trade and how I moved my final stop to here. I also had a long position in this name, TWG, and I want to show everybody what it looked like. You won't see an arrow on this anymore because I've already removed it, but we discussed this ad nauseum yesterday. Bottom line, no red bop in the chart. Nice kind of cup with handle-ish look. On this time frame, we had a couple of volume. We didn't have the bop, max green bop, but we had the volume truncations, and with no red bop, that move here, it was actionable, and it turned out to be a great trade. However, I told everybody after this big up day, I moved my final stop to 390. Look at what the low a day is this day, 385. And I told everybody it clipped me. But you got to have hard stops because Chinese stocks are trash. Now I wasn't even upset, but still there's a 500% gain now that I missed. But I told everybody if I had this trade, I'd be taking more profits off right here at the market following this day, and I would trail stops all the way down with a final stop here. This is why you always use hard stops on these trash Chinese names. I hate Chinese stocks. I hate biotech stocks. Here's why. Bam. What a joke. So I just want to show everybody this is why I always use hard stops on the speculative trades. Now getting to the new long position that I promised everyone. MRX. MRX is can slim quality. MRX has a 98 composite rating. MRX has 36% revenue growth in the most recent quarter. Earnings, I believe, are on November 4th, so you must keep that in mind. But MRX had a huge volume and BOP surge yesterday, and this was due to it offering stock at $24. Look at what the price has done since then. It has held up extremely well. Not only is it 98 comp stock that has got bullish price action following an offering, but it also has an A+ industry group ranking, number 7 out of 197 industry groups. This is how I'm going to do MRX. I'm going to risk and calculate my size to this low. You could risk calculate size to this low. You could risk to here, calculate your size from here. You could risk to there, calculate your size here. You could risk and calculate your size to 50 SMA. No two traders like snowflakes are alike. I'm going to calculate my size and risk to here on 1R of my account portfolio. I'm going to attempt to get along 0.5R of that risk above 2542 and the other 0.5R above 2560. So I'll have a buy stop at 2543. Don't want to pay more than 2554, and I'll have a buy stop at 2561. Don't want to pay more than 2570, and I'll be calculating my size and risking to this low. And why I like this chart is I like the relative strength line, like the industry group, like the composite rating, like that there's no red bop, like the accumulation, like the pocket pivot point signals. But what's the issue? The overall short-term market environment.